Good morning, everybody. We have a higher trade in the grain markets here early on Wednesday morning. It is 6:30 a.m. Central Time. December corn futures up 2 3/4 at 411.5. November soybeans up 8 1/4 at 1072 1/4. December Chicago wheat up 1 1/4 at 633 1/4. December Kansas City wheat up 3 cents at 574. December spring wheat is up 2.5 at 580 1/4. So we've got some good looking prices here. December corn futures, the nearby contract into some fresh highs. December 21 corn futures traded over $4 yesterday, above $4 again here this morning. Nearby November soybean futures only 7 or 8 cents from those highs back from a few weeks ago. The wheat market acting very well, so really a very, very strong action across the grain complex here. EIA will release its weekly ethanol report later this morning. Production, of course, has not returned to what I would call pre-virus levels yet, but the gap in ethanol production between this year and last year is certainly narrowing. Average ethanol production over the last 4 weeks of 912,000 barrels per day. That's down 5% versus the same period last year. So we're not behind by an enormous margin, but we're still behind on a fairly consistent basis. Gasoline demand is still running anywhere from 5 to 10% behind last year's pace. Still definitely have some work to do there. A wide band of the U.S. Corn Belt will see some additional rainfall, a stretch of quite a bit of Oklahoma, actually, Missouri, into, say, eastern Iowa, most of Illinois, Indiana, Ohio. They'll see up to 2 inches of rain over the next 7 days. Some of these areas have also seen some additional rain over the last 3 or 4 days. Your driest areas of the southern plains and the northern plains are likely to remain dry, with the exception of some far eastern areas. China says that its pork supplies will be 30% higher versus last year during the upcoming Lunar New Year holiday. That holiday starts in February. China, of course, is in the process of recovering from African swine fever, which depleted their hog herd over the last 3 years. The most recent Chinese government data suggested that pork output was up 18% in the third quarter versus the same period last year, and that is part of what's driving this real strong demand for soybeans in particular. Wheat futures continue to push higher. This has been a phenomenal rally in the wheat market. SRW prices at 6-year highs, HRW prices at 2-year highs. Weather in the U.S. is an issue. The situation in Russia and the Ukraine, they have some weather issues there. Argentina has some weather issues. Wheat prices in Russia recently hit record high levels. That's partially due to currency, rising export costs, and also some crop issues. Now you got to remember, USDA is projecting that global wheat stocks, or the global wheat stocks to use ratio rather, will be record high following this 2021 marketing year. So on paper, things still very bearish, but in the midst of a crop scare event, that doesn't necessarily matter a whole lot. November grain options expire on Friday. That's a big option expiration for soybeans in particular. So if you have some open positions there, make sure that you take a look. A couple things. I had a couple charts regarding the corn situation in China in my newsletter this morning, and I figured I would discuss this just a little bit. There's been a lot of trade chatter regarding this situation. So Chinese corn prices are trading near record highs. Chinese corn growers had some fairly significant weather issues in each of the last 2 years. China's corn purchases from the U.S. are record high for the marketing year. There are some recent stories in the news wire suggesting that the stockpile is very light. Supplies in China are very tight. USDA's numbers tell you a totally different story. USDA says that China's corn ending stocks will be the lowest in 5 years, but are historically projected to still be very high following this 2021 marketing year. USDA estimates that more than 60% of global corn stocks are held in China. So is USDA wrong? Is the data flawed? Why are corn prices in China screaming higher if this data is even close to reality? That's a good question. There are definitely people in the commodity business who believe that this could be some sort of like black swan event where USDA's numbers are totally flawed and China ends up becoming this massive importer of corn over the next year or two. That's certainly possible. Other people put more trust in USDA's data and say that, you know what, China certainly does have the corn, and maybe they've got some stuff going on short term. But in any case, I mean, you look at the corn sales to China in the export market, and the 2020 sales that we've got going on for this marketing year are the best that we've seen on, I believe, on record. We were real close back in 1995 or 96, but the best we've seen at least since then, and it's by a pretty wide margin. So they've been buying very, very aggressively here, and maybe this is one of the items that explains the current rally in the corn market. Maybe it's not, but it's certainly something to consider, and I believe that at the very least, it's a situation that should be monitored. Contra-seasonal rally in the corn market continues. Fresh highs in the nearby December contract this morning. We have not seen December corn futures trade at these sort of levels on this date since 2013. So this is a very, very pronounced contra-seasonal rally. Spread action remains strong. There's only 5 cents of carry from Dec 20 to July 21 this morning. The market, in regard to these spreads, is I think trying to pull some farmer bushels forward, but also maybe indicative of a supply-demand situation that's tighter than perhaps what the government is letting on. As much as I hate to argue with USDA or ever base anything I do on the idea that USDA is wrong, they've really kind of led us in the wrong direction the last 2 years with these big stocks adjustments in September. It's really not a positive thing. I think that it has cost the farmer money without a doubt, those stocks adjustments in September the last couple of years. Soybean market is acting well. Despite the fact that we've consolidated here a little bit, the uptrend remains intact. Demand is driving the rally. A demand rally is always better than a supply rally. You've got processors in the U.S. that are crushing beans at a breakneck pace. Export sales for the marketing year are the best on record. You've got continued buying from both China and other destinations. Some potentially bearish items to keep in mind. Record Brazilian soybean acreage, of course, the potential for a record crop. There are some people talking about a spike in U.S. corn acreage, although now you've got December 2021 corn futures over $4, and you get a little bit more upside there. It's going to be a lot harder for beans to buy those acres. Wheat futures acting very well, of course. It's really amazing. I was looking at the July 21 Kansas City wheat chart, looking at some sales for next year, and that contract's rallied $1.40 since early August. It's pretty phenomenal the way that all of these markets have rallied. Cattle futures were slightly higher yesterday. There was some cash cattle trade reported at, I think it was 106, 103, up to 106, so certainly down versus last week. But the board did recover and bounced off of some lows yesterday, which is positive. Ahead of the cash open, the stock market is just marginally lower. The Dow's down about 30 points. S&P's down 5. Bonds are off a little bit. Crude oil is down 70 cents. Gold and silver up just a little bit. Remember, if you'd like some more information, visit my website, www.standardgrain.com. Go to that website, click on Grain Marketing Plan. If you would like to know when, how, and specifically I am pricing corn, soybeans, and wheat throughout the year, it's broken down by crop year, and by percentage. Sign up for that subscription service. You can cancel it at any time. There's no obligation, no other fees involved. Everyone have a wonderful day today. I will talk to you same time tomorrow.